There was this great comment on my efficient market hypothesis video, and you can see here the research I do on looking stock by stock, and how it's still not clear what's the benefit of doing research, what's the benefit of thinking when it comes to investing. Just put your money in index funds, forget about it, and you'll end up rich. And just over the last few months, I analyzed so many stocks, portfolios we look. Here we have our quadrant where we follow here on YouTube a lot of stocks. You have more on my research platform, the premium version of this. And then I really think that thinking about money and investment helps you reach a higher level of wealth over time. S&P 500 is not thinking and therefore risky. Because if you go to investing, what are the principles? You invest money now to have more in the future, you want to compound wealth, no matter what happens, reach financial freedom, whatever, but you need to do that in a safe way, which is thinking about risk, and just indexing misses that key factor. And also the price and value. Put that into a life cycle perspective and you'll see the benefits. Let's start by discussing money now to get more money in the future. If you look at the S&P 500, you say, look, you just put it in the S&P 500, this is 15% per year for the last 15 years. What can possibly go wrong? The same chart, just go 10 years earlier before this huge bull market, 9 years performance minus 50%. That was negative over 9 years. Same business, S&P 500, everything great. That is what can happen. So you must always compare the risk and reward when it comes to investing. And this is not compounding, this is not leading to your financial goals, and that's why we have to analyze the risk. And if I look at valuations now, dot-com bubble, minus 50 was the result. We are somewhere there, because that is exactly what happened, 50% down the last time this happened. So you have to ask yourself, what's the margin of safety when it comes to investing? If I look at the dividend yield, here the dividend yield was 6%, wherever stocks would go, you would get your money in bank. You get just 1%, which is nothing. Then you ask yourself, price versus value. And that's the key. 1% is not much. And now it comes to life and investing, and where thinking really helps. Do you have better options in life with your money than to go into the S&P 500 now? Perhaps you just want to buy that old mountain cabin, refurbish it. Maybe you want to buy a boat to go spearfishing. This is my next one. Maybe your wife wants to put a new kitchen, and as they say, happy wife, happy life, best return on investment. Maybe your mortgage rates are above 5%. 5% pay down your mortgage is much better than a risky 1%. 5% certainty. And that's where the thinking excels. There are people that are putting money into S&P 500 and not paying down their credit card bills. And that's crazy. But let me tell you my thinking story, and while I'll always be a proponent of thinking when it comes to money. This is the residential property prices for the Netherlands. We moved to the Netherlands here, and I had a job, permanent, all good, and I was looking to buy a house. And we bought here in Blaricum, close to Amsterdam, very nice place to live. Now, my thinking versus not thinking. All my colleagues, financials, Ph.Ds, everyone were saying, now it's not a good time to buy because the market is going down. Okay, and nobody was buying. You would look at the street, there were signs of for sale everywhere. And I was looking, okay, prices still down, it was hard to sell. But then I made just a few calculations. The price we paid was 290,000 euro. I got a fixed mortgage at 3.55%. The pay was 1,380 per month, 1,164 after taxes. You get some money back in the Netherlands. The rent for the same house there was 2,000. That was screaming value to me. Painted house equal to mine next door has just been sold for 390. Had a margin of safety in the price, in the painting. We painted the whole house, no problem. And that's why thinking stocks everywhere gives a huge advantage in life. And that's exactly what all these people indexing are missing. And when the next time this happens, the 50%, I want you to be ready. I want you to look at valuations, at dividends. I want you to reinvest that money. I want you to have the courage to buy when everybody else is selling. If you want more courage, conviction, you can check my research platform.